Hey, good morning, everyone. It's Tuesday and it's May the 13th. It's CPI day, so we know it's going to be a highly volatile day. I want to take you through the trade I took this morning and kind of the market conditions for why I took that trade. So we're on the 1 minute time frame here. We can see that Asia and London ranged, okay? And this is not uncommon the day before CPI or any red folder news event. So let me explain what that means. So when we have a day that ranges, we have very defined highs and lows. Oops. And this is the market's way of engineering liquidity. So we came down a little bit and then London ranged. Okay, so this gives us great insight as to what to expect for the New York session. So when Asia and London range like this, what's happening is that above and below, market is engineering liquidity. Okay. And so our job as traders is to determine, is price going to move lower or higher? So here we have liquidity, okay, being engineered above and below Asia and London. So we don't know what way price is going to move. We have to kind of look for clues. So this morning, London made a low at 449. So that's around 5 a.m. And from there, price started to move upward. So we can assume that price is bullish. We kind of know from yesterday's price action that price is bullish. And then we also know from looking at the news this morning, core CPI month over month, CPI month over month, and CPI year over year. Look how low these prices are compared with the forecast, okay? It was forecasted to be 0.3, but core CPI came in at 0.2. CPI month over month, forecasted to be 0.3, came in at 0.2, and CPI year over year, which is the really important number, okay? Month over month just gives us a picture of the month, but the CPI year over year gives us a broader picture, more data, more information. The forecast was to be 2.4 and we came in at 2.3. So this tells us that the CPI came in lower than anticipated, and that makes the Fed pretty darn happy, okay? Even amongst or amid all of this tariff information. So this morning, when price opened up at 9:30, we had, when data was released at 8:30, we had a big whip to the upside, a big wick to the downside. You know, we need to let that settle. And then price created an order block. We broke the lows here. So we broke the lows here. We swept this low, and then price immediately started to move up. Okay, so we want to trade with the trend. We want to make things easy for us. We want to move with the trend. 71% of the time, trend is bullish. So for those bears in the crowd, you know, we have to get used to being comfortable with being bullish. So the first fair value gap, this was at 932, 933. I was not going to enter at this time. Price continued to move up. It made fair value gaps, etc., etc. So here's where I decided to enter the trade. I use my Fibonacci to determine how far price may move up. So I took the low from 3:34 a.m. from London, and then I took it to the just after opening of the market, so around 9:41. Okay, so this was my point of the high of the market compared to London low, and so I used my fib to determine where might price want to go. So price Usually when we have that fib, it can go to negative 23%, negative 61%. And at the very top would be negative 100%. I'm going to put my fib levels after we have this discussion, so just stay tuned, and then I'll give you those levels in case you don't have them, because this is a great way of trying to determine where price is going. So I entered off of this fair value gap. So price was moving up, it came down. What I'm looking for is I'm looking for price action to continue to be very bullish. And that means that I don't want price coming down to the 50% of the fair value gap or the lower quadrant of the fair value gap. I'm looking for price to tap or kiss the top of that fair value gap and then move up. And that's exactly where I entered. I entered at 21,091. I entered with 1 mini. And then I was targeting this negative 23%, and I exited just before that. Of course, price moved much, much higher. It moved to the 61.8%, which is a good solid move, and you could have ridden price up to there. If you've been following my channel, you know that one of my goals is to remain in the trend longer. I only bought 1 mini, so it was not possible for me to pyramid out, but going forward, as I increase my position size, I will be able to pyramid out. So just wanted to share this. Overall, this was a let me just see, it was a $700 trade divided by 25, so it was 28 points or $700. And look, you know what? Our goal, or my goal, is to be consistent day over day. Okay, I'm not looking to get in at the beginning of the moves. I'm not looking to ride the moves to the very end. I'm looking for that meaty middle section that provides me with just a nice trade, basically. I'm not looking for perfection. I don't want to be perfect in these markets. That's a really hard edge to maintain, but I'm looking for that kind of like that middle section. I always want to trade with trend, and after I saw New York and London overnight, that gave me a very nice indication of what price was about to do. So I hope you've enjoyed this video. Please like, share, and subscribe because it helps to build the channel. And I look forward to seeing you tomorrow or later in the week. Okay, everyone, take care. Bye for now.